Hi, Ryan Zupan here. I've been getting a ton of questions lately on the coronavirus and how that'll impact mortgage rates. So I wanted to put out a quick video to cover that topic. So if you're maybe thinking of buying in the next year, or you have a mortgage coming up for renewal in the next year, maybe you already have a mortgage, you're wondering, is it worth looking to refinance? This is the video for you. And if you have any friends or family that have mortgages or looking to buy, please forward this to them, because this is information that I think they're going to want to know. What impact will coronavirus have on mortgage rates? Well, I'll try and keep this simple. Lower rates. Until the world's figured out a way to manage this thing, there's going to be no pressure for rates to go up. The Bank of Canada dropped rates by 0.5 percentage point last week. That's twice their normal move, something they haven't done since the great financial crisis. Bond yields, which are what fixed rates are priced on, have hit all-time lows in Canada's history. I think we're going to start seeing some of the lowest rates we've ever seen. We already starting to see that in all of Canada's interest rate history. Regardless of your thoughts on coronavirus, I mean, if you think it's too hyped up, if it's not hyped up enough, the reality is this is extremely contagious. And this really boils down to the power of exponential growth. Consider this example. Let's say you have a stadium where the number of people inside doubles every day. And on the 50th day, the stadium is 100% full. How many days did it take for the stadium to be half full? 49. How about a quarter full? 48. How about 12.5% full? 47. How about 6.25% full? 46. So in the span of 4 days, it goes from being barely full at all, 6.25%, to being 100% full. That is why governments are, it might seem like they're acting too quickly, too heavy-handedly, too quickly. But they're trying to nip things in the bud and prevent the absolute overwhelming of the healthcare system. The path I think we can expect on are schools likely to be closed. I mean, employers telling employees already to start working from home. Conferences, sporting events being canceled. The countries that have gotten a handle on this have really implemented draconian measures of, more or less locking people inside their homes to prevent the spread. And I think that's likely what we're going to see here. To frame all this from the perspective of the economy, I mean, obviously, this isn't good. Canada's growth had already been slowing before this virus hit. I mean, you look at the price of commodities, or look at the price of oil. I mean, those started to tank before the Saudi-Russian feud that's broke out this week. When you think about the knock-on effects of the economy and what happens when people aren't going out for dinner, when they're not going to the mall, booking flights, booking hotels, I mean, when companies aren't seeing sales, they have to cut costs, and they do that not by lowering people's wages, but by laying people off. And you could really see how this deflationary shock can be self-reflexive. When people lose their jobs, they're spending even less money. And all of this points to much lower interest rates. So what does this mean to you? Looking at this purely from a mortgage perspective, I mean, obviously this is good. Lower rates are better, right? If you have a mortgage that's over 3%, definitely get in touch, because it might be worth you actually paying the penalty and saving money by refinancing, getting into a lower rate and locking in a longer term. In the last week, I found a ton of opportunities for my clients to do that. And I still think it's too early to be finalizing those plans, but at least we know the savings is there. And as rates drop, the savings is going to continue. And we can wait until timing is right. Boom. We do that refinance and save you money. If you have a mortgage that's coming up for renewal in the next 6 months, do not take your lender's early renewal offer. Not before at least talking with me first. I'll tell you if it's worth taking or if it's worth waiting to see. In the last 3 months, I can tell you I haven't seen any early renewal offers that have been low enough to make it worthwhile for the client to take that and give up the next few months of waiting to see what rates will do. If you're looking to buy a place, I mean, listen, there's going to be opportunity out there. There's going to be sellers that have to sell, and there's probably going to be some pretty spectacular deals from people that do need to sell. On the mortgage side of things, you're going to be looking at some of the lowest rates we've ever had, so you can lock in low cash flow, which is, of course, a good thing. Final piece I want to add here is that there is already a ton of government debt in the system, and there's about to be a heck of a lot more. The way governments are going to get out of this mess is by trying to inflate that debt away, create meaningful inflation. Any of us who have talked to our parents about mortgages that they've had in the early 80s and early 90s, in the high teens and even in the 20% range, I mean, the reason rates got those high, that high in those instances, was because inflation was getting away from the central banks and they were trying to reel that in. I'm not saying I think interest rates are going to go to 15%, but they don't have to. A rate going from in the low twos to the mid fives, which is very reasonable, that's going to create a huge shock to a lot of borrowers. And it's something that you want to be aware of. Once this worm is turned and things are back on the up, it's going to be essential for you not to be working with your account rep at the bank, not to be working with your bank specialist, because those people, they don't get compensated for refinancing their existing book, for servicing their existing book. It's very rare for a banker to be bringing an opportunity to refinance where you're saving money to you. Total opposite with brokers. I mean, that is really where we're worth our weight in gold. That's how we make more money, is finding opportunities for our clients. So make sure you're working with someone who has your best interests at heart, that knows what's going on, and is going to be able to time these transactions for you in a way that's really has the potential to save you thousands of dollars. In terms of higher rates, if you're concerned, not in the near term, but down the road, of what inflation can mean to your mortgage, and if you want to prepare for that, I have some awesome strategies. One in particular called the inflation hedge, which is going to be great for anyone that is concerned with that risk. But this has already gone too long, so I'll let you go. And if you have any questions, please feel free to get in touch. Thanks and have a great day.